Hello, everyone, and welcome to the Ventures Podcast. I'm excited about today's episode with Chen from Injective. Injective is a DeFi-focused blockchain. It's a layer one in the Cosmos ecosystem, and we actually get into a number of topics that we've never talked about on this show before. Some pretty niche DeFi topics that I'm frankly excited that we get a chance to dive into. This is definitely will be an educational podcast for many of you that aren't deep in the DeFi world. But even if you are deep in the DeFi world, this is a really good opportunity to learn more about Injective and why you as a developer, as an entrepreneur, or even investor, or even somebody who trades in the crypto world should look more specifically at Injective. So if you're listening to this episode, you can also watch by visiting wclittle.com. There I'll have more extensive show notes to the things that we talk about today. And if you are watching, you can also listen anywhere that you get your podcast. You can just search for Ventures and it should show up. So with that, please enjoy this conversation with Chen. All right, Eric, welcome to the show.
Thanks so much for having me.
So the last 40 episodes or so, we've been looking at lots of different aspects of Web3. And lots of different projects with regard to DeFi and DAOs and metaverses and different types of tokens and obviously NFTs. And so, yeah, I'm really, really delighted to have you on the show to talk more specifically about your background and experience in Injective. So if you wouldn't mind just starting, just tell us a little bit about your background. Like where do you come from professionally? How did you get into Web3?
Yeah, so predating Injective, I was mainly working as a researcher and trader, both partially kind of when I was in school at the university lab, and also, after that, for fun, working on like a lot of trading strategy and found a lot of opportunity within, the crypto space, a lot of, lower hanging fruit strategies that at the scale of the capital yielded a lot of return.
Yeah.
And on top of that, got more interested into the investment side. And then after a while, basically saw a lot of opportunity, especially given that a lot of my work at the research lab was mainly around cryptography. And after that, I kind of saw a lot of potential applications and kind of like future of Web3, essentially using some of the cryptography tricks and some of the fundamental understanding to really innovate some of the existing primitives and infrastructures.
Awesome. And this may be too technical, but at least at the level that you feel comfortable, what were some of those cryptography tricks? Like what was it that was getting you so excited about this field?
Yeah, I think there's like one that's like pretty interesting, which is one of the research that I was mainly working on, which is verifiable delay function. And so at that time, or honestly, like at any point in time, it's very hard to maintain like a concept of time within, machines or like computers and so forth, in like a broad sense, because they could be like false reporting time. They could be telling you like it's 10 o'clock when in reality it's like probably like 12 o'clock and so forth. You can't trust what everyone is saying, basically. Bitcoin doesn't necessarily solve this issue. Through the proof of work mechanism, it actually dynamically adjusts based on historical timestamp on the difficulty, but it does allow, kind of like a guaranteed block time in a probabilistic way, but not in an accurate way. So verifiable delay function is basically, it basically allows, this primitive where like the fastest machine in the world cannot like no matter how many servers there are, like how big the server farm there is, this algorithm you can not calculate it. Basically, there is an upper limit in terms of how fast you can calculate this algorithm, and you can easily verify that this algorithm is being calculated. So it becomes kind of like this this concept of time elapsed. So it's within like this decentralized environment. So for example, right, I want to go ahead and prove that, hey, it has been 2 seconds since we last talked. So essentially, like after we left it off, I'll start calculating, this evaluation eval function, which generates like a proof for that 2 seconds, and then I
Mm,
send it over to you, it'll probably take you like a few milliseconds to verify. Oh, like this is an algorithm to prove that it has indeed been 2 seconds. Um, Actually, in the more like real world application, relatively speaking, like Solana use like a version of this for their consensus mechanism for their
mhm.
Tower BFT. Although it's not like the pure sense of a verifiable delay function, but that's one of the first like applications of usage that most people might have heard of or touch with.
Got it. And then you said that was called Tower BFT. What was it?
I think it's called Tower BFT, or it's let's see. No, Tower BFT is what Solana did, so
Yeah.
I kind of forgot which one was it. Yeah.
Yeah, yeah. No, that's cool. I like to nerd out about those technical details, and a lot of the audience does does as well. Okay, cool. We just learned something about verify. What do you say? Verified delay functions.
Verifiable delay function.
Verifiable delay functions to prove that, or at least have an algorithm that it actually happened X amount of time to go. That's all right. That's cool. I love that. All right. So then from there, where did your journey take you into Web3 and the story into Injective?
So DeFi was a pretty new concept back then. I don't think that term was even coined.
Mm,
Um, Back then there were like some London protocols, some DEXes,
right.
some here and there like bundle things that have something to do with like finance, have something to do with dApps on Ethereum or dApps in general, but nothing too concrete. And it wasn't like probably like until like there was a random group chat, and then they call it like a DeFi, where that term was really like has a nice ring to it.
Yeah.
Was simple enough, and like everyone just started like kind of like rallying around it, where it really became like this sector or this industry over time. And so that's kind of like my first touch on it. Is like I feel like um, exchange obviously was this hub of value and aggregation and communication, especially in the crypto space, where you might not know much about, I guess, like any like projects or communities outside of Bitcoin or Ethereum, but you've definitely heard of Coinbase, Binance, and so forth. And so for such a infrastructure, such a huge infrastructure that's kind of like embedded within like a decentralized community, like it makes a lot more sense for that infrastructure to be at least have a decentralized counterpart as well. And especially during the training days, like there were so many issues in terms of basically bad user experience,
Right.
and like malicious activities and overall like suspicious behavior from like decentralized exchanges and so many like exit scams and so forth. And even to this day, we're still spotting some of the tier, I guess, like almost tier one, tier two, or like tier three exchanges, still displaying like questionable behaviors. It became clear that you need something that's trustworthy, you need
Yeah.
something that's decentralized, and
Yeah.
most importantly, like until regulation comes in, like and like really places a global emphasis on making sure these centralized exchanges are acting fairly, like um, a decentralized trustless counterpart is the best approach to go for an average user.
Yeah. Yeah. Okay. So give us the Injective 101. Like, what is it? Why is it different? Who should use it? Let's start there.
Yeah. So Injective is kind of like a layer one proof of stake public blockchain that creates currently the best possible environment for DeFi developers, with kind of this innate capital efficient decentralized exchange infrastructure for digital assets and derivatives. So it means that it has a really high throughput and speed, that's both instant, that has the property of instant finality and stability at the same time. So this means that with the innate order book infrastructure, with the innate derivative infrastructure, and with the removal of any type of minor extractable value, front running, and so forth, you essentially have a safe environment where any type of DeFi application, any type of primitives can really thrive in this ecosystem without having to face the same issue on Ethereum and other environments as well.
Got it.
And yeah, so it's tightly coupled with Ethereum and a few other chains, but one of the shining point is that it is kind of like an application or like a sector focused chain that basically, generic application can still be built on top of Injective, but they're not necessarily, leveraging they're not necessarily making the both best out of Injective, which is, like the innate, the DeFi infrastructure that makes doing a lot of things easier, and it allows, applications and dApps and, primitives to do things that are not possible on any other chain.
Yeah. Okay. So that's cool. All right. So you said a number of things that are definitely worth jumping into. We actually haven't talked about any MEV very much on this show. Would you mind? And you said reducing or eliminating that. Would you mind actually just giving the audience a 101? What is MEV? Why does it matter? And why did you approach that particular aspect of it with Injective?
Yeah, of course. So essentially, there are mainly two things when it comes to MEV. The most palpable sense is that there's a reason why Ethereum gas fee is so expensive right now, and that's because all these front running, all these, like basically like financial opportunities within the Ethereum blockchain due to inefficiencies, due to these like exploitable opportunities, makes it so that people are willing to kind of cannibalize the gas economy and make everything else, every single other utility, more expensive,
Yeah.
because there's only so many transactions can fit into a block. If a bunch of people are trying to profit off of it and don't care about how much a transaction costs, and paying a huge premium into the auctioning process,
Right.
those who are just trying to make simple transfer or buying an NFT, is going to have to pay the same cost as those who are inherently making money from it. So that's kind of like the palpable sense of MEV. On top of that, it's just, like these opportunities, first of all, should not exist. It's kind of like an inherent flaw in design,
Yeah.
almost in a sense,
Yeah.
for like a Ethereum DeFi ecosystem. And then second of all, more importantly, is that it basically makes everything a little bit more expensive. If you ever want to do a big trade, you'll get front run and sandwiched. If you ever want to make a big transaction, anything that might be a little bit unsophisticated in the nature of flow, basically, you'll get priced out. You might have your transaction failed. From a financial perspective, it's overall like a UX degradation in both DeFi, and also in anything that happens within Web3.
Yeah, yeah, yeah. Because what was that? A month or two ago, and Yuga Labs launched their other side, and this happens with any of these huge NFT mints. It just clogs Ethereum, right? People were spending up to three ETH or more on just the transaction fee to get to buy something that was worth like two ETH. back
Yeah.
back then, way back then, that was $9,000 in transaction fees people would pay. Now, and so just if there is lots of demand for block space, why is it a bad thing that somebody's willing to pay more for transaction fees to get their transaction in an earlier block? Like, why is that an inefficiency?
From like a free market perspective, it's not necessarily an inefficiency, but from a utility and adoption standpoint, um, basically, you can understand it as, um, someone is paying uh, um, paying for the privilege, and basically paying for a lesson to interact with DeFi protocol,
Right.
where it goes to the person who exploits that opportunity. Because at the end of the day, this opportunity comes from flaws in like, I guess like theoretical flaws in like design, theoretical flaws in um, basically user interaction, or like unsophisticated flow in like, I guess, a trading world. Um, so people exploit that, but at the same time, like generally this is kind of a normal activity, but since it involves gas, so it affects all the other applications at the same time.
Hmm.
Um, so
Yeah.
so this is bad for Ethereum in a sense, because it can't fully explore a lot of application because of the tragedy of common cost. And then a lot of NFT projects, a lot of GameFi projects move to, for example, Solana, move to, for example, like Polygon and so forth, to really offset that inherent cost.
Right.
Um, but overall, yes, you are correct in a sense that this is just how people interact with the protocol. But essentially, like that type of like, I gave an opportunity, and like people like taking advantage of that. Let that be peer to peer, and don't like drag like other transactions into it. Would be like an ideal world.
That would be an ideal world. Yes. Okay, and I think you have a lot to say on that. Yeah, it also could just straight up create inequities, right? I mean, if the richest people out there are the ones that can cut the line, I mean, it's like Disneyland right now. I haven't been there recently, but my friends that have gone there the last few months said that there are ways to pay to cut the line, and then it's creating this kind of bizarre experience. Um, and with regard to what that does for the validator community, right? Sort of the weird incentives as people are working on extracting MEV. Yeah. Anyway, lots to talk about there. So back to objective or back to injective. Um, you made these design decisions at the protocol level because you were optimizing for what? Like, it sounds like you're very focused on DeFi, creating the best blockchain for DeFi developers. Can you just talk a little bit more about that? Like, why did you design it that way specifically for those developers, if I have that right?
Yeah, I mean, like first of all, like there's a few like core primitive within like DeFi at least. Number one is obviously having this exchange and access to a liquidity and price reference price standpoint. And generally, like Uniswap is kind of like that default avenue for basically a lot of applications on top of Ethereum. But obviously, a lot of drawbacks on Uniswap and kind of like along with other like AMM exchanges in general is that first of all those liquidity are like not dynamic, it's static, it's inefficient, it has impermanent loss. Like it's very very capital intensive to bootstrap liquidity for that.
Yeah.
It's really like a over time, relatively speaking, like a rich get richer game, especially with Uniswap B3, where like managing your position also costs a lot of gas.
Right.
Um, so it's certainly over time, becoming like over overburdening for a lot of projects and overall for a lot of protocols, and puts a limitation in terms of what's possible. And so, basically to have to kind of change that up and to basically kind of remove a lot of limitations in terms of how DeFi applications can be built, and really opening up like kind of the world for them, is having this innate always available like order book discrete liquidity representation that's malleable, that's efficient, that's fast, that also gets executed and matched in the fair frequent batch auction way. That can actually basically using that as an underlying primitive can actually allow for a lot more things than you would imagine, because
Mm,
for starters, AMM and LPing would actually be profitable without like a negative 30% fees, um,
mm,
and also there would not be like a impermanent loss, and over time like more and more sophisticated like on-chain flows and algorithms are thereby democratized, basis trading and so forth, and that's just step one, right? There's also a lot of innate interactions where you can probably copy over, like bring over like the entire offering of Binance into a decentralized world or FTX, and really create this like fully on-chain, fully fair, fully transparent like infrastructure that enables access for everyone. And last but not least, basically like then everything on top of this chain is composable. Um, it
mm,
means that derivative position can be exported and used in other DeFi protocols.
mm, mm-hmm.
It can be coupled with like other instruments like a like a Aave, like a LP, lending or borrowing position, to make it like risk neutral, or it could be even used. Like these derivative position could also be even used as like a flexible options protocol, where you actually get to have really capital efficient margining for selling options in the DeFi context, which is
Yeah.
absolutely really really in really hot demand at the moment.
Right.
But there's just no capital efficient solution for fair pricing. Um,
Mm.
yeah, there are just so many things that are thereby like possible as a result of having this base layer infrastructure that's stable, fast, and scalable.
It's good. It's good. All right. So coming back up a few thousand feet, for those who aren't familiar with decentralized exchanges, the difference between an AMM and an order book DEX. Can you talk just more about that, and then how specifically with injective you're establishing some primitives to get after that?
Yeah, so basically, like Injective is built using Cosmos SDK, and it's essentially like a highly expressive and flexible kind of this module modular kind of like blockchain architecture that allows you to add things and basically do everything you want and the Tendermint consensus engine underlying will take care of the some of the more like painful, like
Right.
peer-to-peer networking, and also basic consensus aspect. And
Right.
there's a very specific reason why we picked Tendermint back in the day, before IBC, before
Right.
Cosmos Hub came out, was because it was instant finality, so it's absolutely critical for
Right.
trading, and for order books.
Yep.
So basically, with that in mind, like there are multiple modules on top of Injective that, number one, there's an order book module that basically allows for this storage of orders, and also pruning, like the derivative orders to make sure that they're always collateralized and well
Mm.
margined. And
Mm-hmm.
on top of that, the matching layer that goes through frequent batch auction and the enforcement of derivative positions and liquidations and so forth. So it's overall, like first of all, it's a very very bare bone, so that it doesn't have to go through VM. It
Right.
abstracts a lot of things away.
Right. So
Um,
important.
um,
Yeah.
yeah, basically, like if you like a contract interaction, or like a contract transaction costs 2000x in terms of gas cost, compared to just a innate transaction, if it were trying to to achieve the same result. So obviously, building this, just by default, it's already much cheaper and much more efficient, by nature. And on top of that, throughout the past, um, since the launch of the Canary chain, and I believe it's almost a little bit over a year, and then that the full on mainnet around like November, like the chain has been running steady. No matter how many users has been actively participating in it. After 7 billion in volume, 70 million transactions since like November and so forth. The chain never had any issue, never had any downtime, even when like there was like chunk of orders, a bunch of like matchings, really just churning the network. And on top of that, basically a lot of different types of like testing, and overall like we basically get like a slight sign of relief that it held up so well.
Yeah. Yep. That's a number of us have been talking about. Just the impressive underlying architecture, despite all of the significant learnings. In fact, it is worth pausing for a moment and recapping, what did we learn, like what especially in the Cosmos ecosystem, but Web3 in general. What were the big takeaways from that event, that at least in your mind, that you want to make sure that everybody understands?
Could you repeat that question? Like which
Yeah,
part
like
specifically?
even going specifically with Terra, right?
Yeah, yeah.
What were the takeaways that we need to learn as the Web3 community, but specifically people building uh, uh, layer ones with Cosmos SDK? Um, yeah, in terms of like what are the really important dialogues here? There's at least one in my brain, but there's probably more that you have, and I want to chat through those.
Yeah. So I would say, like, first of all, like if you're a developer or you're a user, there's basically two school of thoughts. In terms of being a developer, I would say like one of the most important thing right now is that uh, DeFi is a like this landscape on top of Ethereum, on top of most of the EVM environment, has been kind of like thoroughly explored, relatively speaking,
Yeah.
where like there's not a lot of obvious low hanging fruit anymore.
Mm.
Obviously, speculation drives innovation, and that means that like all the possible like obvious things, or like missing stack has already been explored. But that being said, it also means that it leaves up for a lot more opportunity for like different practical aspects of different types of higher level products, where like the fundamental like infrastructure or like primitives, it's pretty well established, where like you might not be able to, like 95% chance you might not be able to build something that's like, oh, like this is going to create a whole new ecosystem, or like this is going to be the fundamental lending infrastructure and so forth. But you get to for example, like build the next Citadel equivalent in DeFi, or
Right.
build the next uh, uh, um, example, like a structured product in DeFi that gets a lot of traction. Where generally our thought in terms of space has really shifted from a fat protocol where like the underlying protocol gets the most value, and recently we start to understand and realize that it's really like the application that is going to get the most value, and that's fundamental to like Injective's design as well, where like we just the blockchain just hopes to sit in the back end, where the user might not even realize that they left Ethereum to do something. And from a user perspective, I think the most important aspect is like given the recent Terra incident and given like everything that's going on, especially regarding lending, with BlockFi, with Terra and so forth.
Right.
Um, a great thing is to remember is that any premium to the risk-free rate has a risk. They just don't tell you,
Right.
um, and or it's not immediately palpable.
Yeah.
And so whenever there's a kind of like a like proportionally, like even from a statistics perspective, if you want to put your money into somewhere or into a yield generation protocol for 30 years, sorry, for 1 year, you'd probably want to have like 30 or 50 years of historical track record, just to establish enough confidence. um, so you can probably like allocate things like accordingly. And I think it's really like this cycle of greed, the cycle of
Yeah.
people like really attracted by the crazy yield, thinking that it's a musical chair where like if I find a chair like right before music stops, I'll maximize the yield. And over time, like I feel like people are just blinded, and after like the 100% APY situation, or sometimes even 10,000% APY situation, people kind of sit back and just retract to like a 20% APY environment and say, oh, this is like so much lower than the 100% APY that we've seen, and kind of forgot that inherently like there's still a certain level of risk. It's just different.
Yeah.
It's a little bit more fundamental, because at the end of the day, DeFi as a primitive is extremely new, and unless like this is something extremely boring where it's a bond, where it's just a plain and simple lending and so forth, um, you'd have to evaluate the risk differently. Like let's say if the crypto risk-free rate is you're basing it off of all the platforms out there, or the a nice way to evaluate it is Aave or Compound, where everything is kind of like the supply and demand is a little bit more real time and a little bit more accurate.
Yeah.
And obviously like it's a variable rate, so like that probably means that it's actually pretty good for borrow and lend side, because it goes differently compared to a traditional bond market. um, any premium on top of that, you probably have to think about what where is that difference coming from.
Right.
And let's say like and you have to think about it in terms of like a power law perspective, where let's say Aave or Compound is giving out 1 to 2% APY lending on USDT or USDC. But then for example, like Anchor is giving out 20%.
Right.
It's not really like that 18% difference that you should be worried about. It's that 10x difference that you should be worried about.
Right.
And it is like generally good that like people should like kind of like parameterize the risk accordingly,
Mm.
um, and make sure they understand that, hey, like this is what's normal, this is what's big, why is there a difference, and think about how you allocate, and think about hey, like at least have out the back of your mind that like there is risk behind this, and it's either like you put an effort to actively manage it, so you minimize the potential drawdown where you just stare at your screen 24/7, or the easier way is just allocate smart, um, um, allocate it in like a good way where like you're not beaten up by the potential drawdown from it.
Yeah. So what is the future of stable coins? Like do algorithmic stable coins have a future, you think, or is it all going to be collateralized backed or some combination? Like tell us a little bit about how you're thinking about that particular part of Web3.
I mean, so like from Injective side, or like from like that ecosystem perspective, it's like pretty agnostic.
Mm.
Um, um, generally it's just like whichever one has the most liquidity, people will just naturally list a market, provide a liquidity for it. Right now, it just so happened a lot of community kind of rallies around USDT, likes USDT. They might change their mind recently given the recent
Right.
discounts, but basically like at the moment it's still like the biggest one, it's the most used, it's the most pair, and people can like have half the most available data to evaluate it compared to USDT, relatively speaking. So that's why like an ecosystem or like the overall space picked USDT to be, for example, the go-to at the moment for now. Um, but like these things change a lot. Like
Yeah.
we've seen UST like almost taking over a lot of like the top stable coins, but then wasn't there for long.
Right.
We've seen like USDT really depegged, relatively speaking, a few times, and then returned to peg, and then like slowly over time, like perhaps like especially when these are not like immediately convertible, it's actually a good thing that you get a few peg challenges here and there because basically
Mm.
people place more faith into it and think that
Ah.
okay, like I can arb this difference because clearly like historically it has like for example like 10 or 12 like DPEG incidents, um, um, and like fundamentally most likely like it'll return to peg because it also has like fundamental backing, hypothetically speaking, and then like I will arb it myself rather than
Sure.
wait for like Tether's like T+1 settlement type,
Right.
for example. So overall, I don't think like algorithmic stablecoin will be completely forgotten or like it would never be explored again, but it will definitely be much tougher and it take much longer to grow. And using that, that's why I mentioned USDT as an example, is that basically like um, over time like all these like algorithmic stablecoin that's not immediately convertible, that's basically has like a relatively more room for like speculation where the value doesn't trade very tightly with USD because there's no immediate arb. It generally basically creates times where there's a premium and where there's well basically inherent volatility and gamma and so forth associated with it.
Yeah.
And whenever there's a defect risk, over time, like you have to do a lot of work and a lot of effort to defend it because over time it becomes essentially like a stochastic process where it eventually converges into more confidence and people will just naturally try to like arb it back. And obviously like but
Mm.
then again like whenever there's a deepak risk it means it's existential. It means that like 50-50 you die or like you keep going, right? But like if you go down this like like a binary probability tree, like probably like you have to start off like with like a thousand of them and then like
Right. Right.
like you probably just end up with one that like hey like we survived like 10 deepak, had a decent size and then people trust us enough. And theoretically speaking, that's actually kind of similar to what USDT is. Obviously, there's still a few
Yeah.
over time. Like there's still a few incidents like that away, but like that would be kind of like a CFI analogy of an algorithmic stablecoin.
Mm. That's good. That's good. Okay, so the type of people, the type of let's I want to talk about the type of applications on Injective right now, and then I want to talk about the type of developers that should be more aware of Injective and start building on it. So let's start with what are some examples of projects that you're excited about?
Yeah. So recently, basically, there's going to be a mainnet upgrade proposal that's currently being voted by governance. That's coming up around, I think, next Tuesday, give or take.
Mm.
Where it's the first time that CosmosSDK as a contract environment is enabled, and the first Genesis set of project is going to be deploying, launching, and so forth. So existing, there has been a lot of application layer that where the user experience side in terms of interacting with the chain, and explore some of the fundamental features and fundamental primitive as being built out. So there's for example like Injective Pro as like a overall way of like indexing and kind of like a DEX application that people can like interact with. Interacts pretty intimately with some of the fundamental stuff on top of the chain. And there's a lot of different variations and takes on it. Front Runner is a betting app with like a binary options. Dexterium is has this like offc primitive that they utilize for like guilds, where like people can manage others positions and like strategies, automate a few things, and then like there's also Dojo, which has, honestly, I don't even know what they do, but like, because like they block US, but like they're pretty degen and launch a bunch of like pretty funny memes and campaigns and so forth. So
Yeah.
there's currently quite a few like a diversity in terms of like applications, and I think there's a few like regional ones that are pretty interesting as well. And basically, like after Cosmosm, like recently there's essentially like this genesis set of like projects trying to launch, and you can see them all on like gov.injective.network. Essentially there's Apollo Save, which is actually used to be on top of Terra as well.
Right.
Because like Injective shares the same contract environment for
Sure.
with Terra, so basically a lot of them kind of like just naturally flow over. There's Aperture, which does on-chain like basis trading strategy, which basically means that it's almost like a free money, where basically like generally there's like funding rates on top of like derivative markets, and if you establish a position, you just get paid if you're fully hedged.
Hmm.
And this is essentially like an incentive for derivative market, for people to arb back the derivative market, so that overall like it's in parity. So basis trading is actually kind of like a statistical arbitrage in a sense, where it speculates that this funding period will be positive or negative,
Hmm.
and obviously like it scales with volatility and it plummets with volatility. So during low volatility times, generally, basis trading strategy will probably yield you like, on a good case, a lot of effort for like 5 to 10% in terms of return. But during high volatile times, and a well-managed strategy could be 20 to 50%. But this is why like the yield is free, because it's a very, very active strategy, and there are drawdowns if the strategy is not good enough. So it's not lending; it's not risk free.
Yeah. Yeah. Yeah.
So there's also a lot more. There's also Cato, which is a fiat gateway. And like there's let me see. There's also recently Comdex are trying to launch like a stablecoin bridge over to Injective as well. Yeah, quite a few like activity. And honestly, I'm just catching up to some of the new things that are happening right now.
Yeah. No, that's cool. Okay. All right. So then the call to action for the types of developers that for the types of developers that should come build on Injective. Like what's the basic pitch? Who should come play?
Yeah, I would say like if you're smart, if you like DeFi, or if you like anything that has any relationship with finance, you should definitely check out the environment, because whether you're from traditional finance, you'll find that the environment is much less mind twisting compared to all the weird things you experience with the AMMs and like pool twos and DAOs and so forth, because it is a much more intuitive order book, central limit order book structure. It has a much more sensible offering, and a lot of things become much more clear if you're from TradFi and so forth. And you're from DeFi, like all the painful things about EVM, all the painful things you have to deal with, LPing and AMM. It also kind of removes that headache from for Injective. So overall, it's just, if you want to build something cool, if you want to explore something, or if you have an idea that you couldn't explore before because you're being told that this is impossible in EVM, come on to Injective.
Love it. Cool. All right, where's the best place to get a hold of you if people want to continue the conversation? Are you at Twitter, LinkedIn? What's the best?
Yeah, I would say Twitter's the best. It's at Eric Injective. Pretty simple.
Nice. Awesome. Okay, cool. And then again, for people to learn more about Injective, where should they go?
Injective.com.
Perfect. Love it. All right, Eric, this has been great. Really excited for the project. Excited to follow along and see all the exciting things that are going to be built on Injective, and to be a user myself. I think a lot of the audience, as we learn more about DeFi, we learn more about how actually the trader community and the people who understand finance, it feels like they have superpowers that the rest of us should start learning more about. And this is a good excuse to jump in that game. So really appreciate your time. Thank you.
Thank you so much. Appreciate it.
All right, a couple quick things before you go. Number one, I have a general newsletter where I write about technology and startups and health science and teaching people to code. And I write about a variety of different subjects that we talk about on this show. So if you go to wclittle.com, there you'll be able to subscribe, and you'll also be able to subscribe to particular topics. If you're just interested in one or a few of them, you'll be notified right when I publish new content in those areas. Number two, my partners and I at Proto Ventures have a portfolio company called Startup Rocket. If you go to startuprocket.com, there you'll be able to receive coaching guides and customize an operations framework for you and your team and your advisors to be on the same page in terms of what is the appropriate next step for you and your entrepreneurial journey. And finally, if you wouldn't mind leaving a review anywhere that you have listened to this podcast or watched this podcast, it would be super helpful to help those who might be interested in consuming this content as well. Thank you.